Welcome back. The JSE is weaker. Its global peers were mixed as investors digested the latest figures from the U.S. Federal Reserve's preferred measure of inflation, which came in within expectations. Let's get you some analysis. Independent analyst Mbuso Zulu joins us now for that and for an overview of the latest market news. Mbuso, it's great to see you. Thanks very much indeed for coming onto the program. Give us an overview of how the markets are faring so far today. Hi.
Yeah, the JSE is weaker, as you said. We are seeing the pressure coming through from the resources stocks. We'll speak on Northern a little bit later, but they did report results and they are trading weaker. And it's the financials really that are holding up the markets. And we're taking most of our view from the US. And it seems to be more of a risk-off day on the JSE, and you're also seeing the rand being weaker as well from the start of from the open earlier today.
So safe to say a failed rebound attempt.
Yes, unfortunately.
Yeah. Shall we take a look at AB InBev beating sales estimates and raising its annual dividend by 9%? What do you make of that performance?
Yeah, it's been a pretty resilient performance. However, there is a lot of detail and a lot of divergence as well within the territories. You do see that most of the revenue growth that they have achieved has been as a result of price increases. You did see that volumes did decline, especially if you go into the territories. You are seeing that the US in particular continues to be under pressure for them. They are facing a declining beer market, as you're seeing that younger consumers prefer spirits that are more in range, and you are seeing the beer category as a whole come under pressure. That has been countered by a stronger performance on EM, especially South Africa as well as China. In South Africa, you are seeing strong sales growth coming through and the benefits of premiumization, which is a strategy that the company has embarked on for a number of years, and that is bearing fruit for them. There is still cost pressure in the business where you are seeing costs increasing ahead of top-line growth, and this resulted in the EBITDA margin being under pressure, contracting for the full year, for the period.
Yeah. Northern Platinum posted its interim financial results. That's for the 6 months ending 31 December last year. What do those numbers look like?
Yeah, this is a company that is also facing pressure, especially when you look at the PGM prices. They have declined quite materially. You see that the rhodium price has declined by about 70%, and the palladium price has also declined by about 40%. And so this will obviously have a bearing, as this is the product that they mine and sell. And it is uncertain. If you look at the outlook, there is demand uncertainty, there is pricing uncertainty. So within that context, that does inform the performance of the business to date. However, what did help them is that they did take up the mandatory offer from Implat, and they realized 9 billion from this, and they used those proceeds to pay down debt and to also declare their maiden dividend at the full year results. And in this interim period, they have also declared another dividend as well.
Mbuso, Truworths reporting slower half-year profit growth, 3.6%. I suppose just telling us again that consumers are under incredible pressure, and another retailer mirroring just the general retail picture. Yeah,
the consumers really looking for relief. The consumers under pressure from high interest rates, high food inflation, and just general cost of living. And this is bearing on a discretionary product such as the one that Truworths sells, which is in clothing. And for them in particular, it's credits, mostly credit-linked clothing sales. They do seem to have fared the worst out of the peer group in that you do see that sales in SA in particular have declined by 0.2% for the 6 months. If you extend the period and you look into the new financial year, the first few weeks of trading, you are seeing that the pressure of sales continues, and sales have declined by 0.5% in this new period. And if you look at the group in total, most of the uplift came from the business in the UK, the office business, where they delivered sales of 15% growth, top-line growth of 15% in hard currency terms, and this is what has bolstered the sales growth for the business. However, at an operating profit and more so into the earnings line, it's that growth of 3.6%, as you say. Finance costs did detract, and then with the dividend as well, that also increased by 3.8%. But really mirroring the issue and the picture that the SA consumer is facing and its pressure, and they are diverting that spend and being more selective.
Yeah, absolutely. No room for luxuries at the moment. And then EOH Mbuso is set to pay SARS 112 million rand to settle a pay-as-you-earn dispute involving its unit EOH Abantu. Help us make sense of these developments.
This dispute goes back a number of years, I think to 2012. And yes, it's been a number of years as well, back and forth with the new CEO that came into EOH, Stephen Collar, who then tried to sort this issue out with SARS. They did last year provide for about 116 million in what they expected to pay for this. So the eventual settlement of 112 million is within the figure that they have provided. They did forfeit a tax credit of 6.9 million, but it is generally what they had expected to pay. So it does put to bed a long-standing issue from the business that goes back many years before the current and actually now outgoing CEO.
Mbuso Zulu, let me thank you for your time this afternoon. Your latest market moves with Independent analyst Mbuso Zulu.